The crypto markets are once again at a breaking point. XRP has fought its way back to the critical $3 support level, a price zone that carries enormous weight not just for traders, but for the future of the entire asset. And here's where the stakes get real. If this level holds, XRP could be on the verge of a massive breakout that reshapes the entire crypto landscape. But if it fails, the slide could be brutal, wiping out billions and shaking investor confidence in ways we've never seen before. This isn't just about numbers on a chart. It's about whether XRP holders, who've been through years of SEC battles, whale sell-offs, false rallies, and endless predictions will finally see their patience rewarded, or if history is about to deal them another devastating blow. Imagine being the investor who bought near the highs of the last bull cycle, waiting, holding, believing, only to watch XRP hover over the edge of collapse yet again. The emotional toll is heavy, the market pressure is immense, and every move at this $3 level could change the future of Ripple's ecosystem forever. But here's the kicker: behind the chaos of daily candles and whale games, something much bigger is brewing. Regulatory clarity is tightening, ETFs are coming into the picture, and the Federal Reserve's latest signals are about to shake risk assets across the board. The question now is simple: can XRP survive this pressure cooker, or will $3 become the graveyard for yet another failed rally? Stay with me, because in the next few minutes, we're going to break down the technicals, the whale moves, the regulatory wins, and the raw psychology driving XRP traders right now. And by the end of this, you'll see why some analysts are quietly calling this the most important moment in XRP's history. So let's dive deep. But before we break open the charts and connect the dots, let me leave you with this cliffhanger. A single whale transaction just hit the books, one that could decide whether XRP explodes upward from $3 or collapses under its own weight. And the truth behind that move is more shocking than most holders realize. Deep dive. XRP at $3 isn't just another support test, it's the line in the sand between two entirely different futures. If you pull up the daily and weekly charts, what you'll notice immediately is that the $3 level aligns with one of the most historically significant resistance-turn-support zones in XRP entire trading history. Back in the early 2018 bull cycle, this was the peak level where euphoria turned to collapse. For years, XRP was buried under this line, and now, finally, it's being retested as support. Think about the emotional symmetry here. For years, investors stared at that $3 line as the someday dream target. The mythical level XRP would need to break again to prove it wasn't just a relic of its past. And now, after SEC litigation, after countless whale sell-offs, after the pain of XRP underperforming while other assets ran wild, it's finally back. But instead of euphoria, we're standing on the knife's edge. Because the market knows what you and I know: if XRP fails here, the narrative could collapse. Now let's talk whales. Over the past 72 hours, we've seen multiple transactions over 100 million XRP each move between unknown wallets and exchanges. These aren't retail players, these are either institutional sellers, hedge funds positioning ahead of policy moves, or internal Ripple-linked wallets shifting supply. Every time these transactions hit, retail feels the pressure, fear spreads. Are the whales dumping on us again? But here's what's different this time: alongside the sell pressure, we've also seen equally massive buys accumulation happening right as XRP hugs the $3 line. That's not random, that's strategy. Why? Because whales know the psychology of this level, they know retail is watching it with sweaty palms, they know fear triggers panic sells, and if they can scoop XRP at these levels while forcing weak hands out, they stand to ride the next breakout wave into levels no one thought possible. Let's tie in the Fed here. Jerome Powell's latest hints at a rate cut sent shockwaves through risk assets. Bitcoin spiked, equities rallied, and suddenly liquidity returned to the market, but XRP barely budged. Why? Because unlike other assets, XRP's price isn't just about macro liquidity, it's about trust. The market is still traumatized from the SEC lawsuit years. Investors are cautious. That means when XRP finally makes its move, it won't be a slow grind, it'll be a violent breakout driven by years of suppressed energy. And here's where regulation comes in. Behind the scenes, multiple U.S. policymakers are now openly acknowledging that XRP may qualify for inclusion in future ETF products. This is the quiet narrative no one is paying attention to while the headlines scream sell-off and support test. The truth is, institutions are circling. They want clarity. And the moment that clarity comes, ETF and structured products could flood XRP with the one thing it has always lacked: sustained institutional demand. But let's pull back to the chart for a moment. Look at the daily RSI, it's oversold but turning upward. Look at the Bollinger Bands, they're tightening, signaling an explosive move. Look at the volume profile, spikes right at $3 suggesting massive accumulation. And now consider this: the longer XRP holds above this level, the more powerful the breakout becomes when it finally launches. So where does this go next? There are three possible scenarios. First, the bullish breakout. XRP holds the $3 support, whales flip from selling to accumulation, and with Fed liquidity behind it, the price surges past $3.50, then $4 targeting $7 in the midterm. this is the scenario the bulls are praying for, the bearish breakdown. XRP loses $3, cascading liquidations kick in, leveraged longs get crushed, and we see a painful slide back toward $2 or even $2 retail capitulates, headlines scream XRP is dead again, and whales quietly load up at discount levels, the sideways trap. XRP grinds along the $3 level for weeks, chopping up traders, killing momentum, draining sentiment until a catalyst like ETF approval or Fed policy finally decides the direction. And here's the brutal truth, each of these paths is possible. That's why emotions are running hotter than ever. Holders are terrified of being wrong. Some believe this is it, the final shot before XRP either cements its legacy or fades into irrelevance. Others believe XRP best days are still ahead and that this support is the blessing in disguise, a rare chance to position before the breakout. The irony, both could be right depending on your time horizon, because while short-term charts scream danger, the long-term fundamentals scream opportunity. Ripple's cross-border partnerships are growing. Banks are watching, regulators are moving toward clarity, and whether it happens tomorrow or next year, XRP's role in the financial system is becoming harder and harder to ignore. So, where does that leave us? Right here at the cliffhanger moment. XRP is clinging to $3, whales are battling retail, regulators are circling, and the Fed's next move could either ignite the rally or crush it in seconds, which means this isn't just a technical support test, it's a psychological battlefield, a war for the soul of XRP narrative, and by the time this battle is decided, fortunes will be made and lost. The question is, which side of history will you be on when XRP finally makes its move? For perspective, XRP managed to climb back above $3 on Tuesday, marking its first positive daily close in 4 sessions. The recent pullback mirrors the broader crypto market's turbulence, driven by global economic pressures and profit-taking by large holders. Still, when XRP briefly dropped to $2.82 just 2 days earlier, many enthusiasts saw it as a golden chance to accumulate more at a bargain price. Their optimism is rooted in a growing belief that XRP is on the verge of breaking into unexplored price levels soon. Every dip is an opportunity. Well-known crypto commentator Dusty BC Crypto echoed this sentiment in a recent post, encouraging investors to treat XRP's decline as a buying opportunity. He revealed that he's personally taking advantage of the lower prices, adding that he's accumulating XRP like there's no tomorrow. Explained his reasoning by comparing XRP's current range of $2 to $3 with its former long-term range between 45 cents and 55 cents. For nearly 9 months, XRP has hovered within this $2 to $3 zone, which he argues could be the modern equivalent of that earlier consolidation range. The implication is that, just as XRP eventually broke free from 45 to 55 cents after years of sideways movement, it could now be preparing for another breakout to much higher levels. In fact, XRP rallied 500% when it surged from 50 cents in November 2024 to $3.40 by January 2025. If history repeats, a similar move could push XRP into double-digit territory. Dusty BC suggested that such a rally might arrive sooner rather than later, expressing his eagerness for the next major uptrend. His conviction resonates with many in the XRP community who believe the bull cycle is still alive. Other analysts share the optimism. Dusty BC isn't alone in his bullish stance. Analyst Alex Cobb described XRP's brief dip below $3 as unreal, claiming it was nothing more than a psychological trick designed to shake holders out of their positions. He warned investors not to hand over what he called the greatest investment of all time to powerful institutions like BlackRock. Cobb even predicted that XRP could bounce back to $3.60 before the end of August.